Elsewhere, the news about the G20 meeting this week taking place later on today in Pittsburgh. Already some reaction in the currency markets in anticipation of this confab. The euro's down from a one-year high versus the U.S. dollar. And it's actually speculated that the euro's rapid recent rise is actually on the agenda for the talks. Meantime, our next guest is calling for dollar strength in the next 6 months. Some would say against the grain. And we welcome back Adrian Foster, head of financial markets research at Rabobank. And it's been a while, Adrian. You finished your PhD in Australia to get back into the markets. Welcome back.
Thank you.
All right, Adrian, let's talk about the G20 meeting taking place in Pittsburgh. What do you think about the rapid rise of the euro? Is it a point of concern for the leaders? Does it have to be on the agenda?
No, it doesn't have to be on the agenda. I think it's definitely a point of concern for some European leaders. But if we just go back and think in a broader context, the G7, the strength of that meeting was that there was a manageable number of people who could possibly come to a firm conclusion. They often didn't, in fact. So the G20 is a better forum because, of course, it includes so many more of the world's sort of powerhouses. But it's a bigger forum, and therefore it's going to be harder, I think, for any sort of net view to come out. If you think what the G20 is going to be dealing with, the whole finance sector issues, global warming and the whole carbon emission sort of schemes that a lot of countries are talking about, I'd be surprised if they come up with a firm message on the currencies.
Yeah. Well, let me just ask you about the euro's rise. I mean, if you're expecting dollar strength in the next 6 months, obviously this will be muted at some point pretty soon, right?
The euro strength will be muted, exactly. Yeah. We just look back over the last couple of months, and if you go back to, say, February, March this year, the world was looking over this kind of economic precipice into global depression, as a lot of people saw it. The views turned around very quickly in March and April, and I guess government stimulus has a lot to do with that, but there's a lot of other dynamics at work there. And suddenly global equities have moved quite aggressively to discount a much brighter outlook. Now, what's been the funding currency that speculative money has used to sort of express that view? Historically, it might have been the yen, it might have been the Swiss franc, but look at interest rates now, it's probably been the dollar. So we think the dollar's been sold aggressively as a part of that global recovery story. If you look at the levels on some of these major indices now, they're back to that kind of September 2008 level, which is when, of course, the financial crisis erupted. Prior to that, it was just a sort of a garden variety recession, I guess. So we think some of the weaker holders of equities, the speculative money, are probably likely to be taking some of their profits off the table around these levels, and that could lead to, or we think it will lead to, some buying back of those dollar shorts. Okay,
well, let me just ask you where you see the euro heading, because I'm going to bring up the survey average we have on the Bloomberg system. We're looking at 145 to the U.S. dollar in the at the end of this year. Also, Q1 2010, we're looking for 142 versus the U.S. Sounds about right to you?
137 by the end of this year.
137.
Euro dollar.
How about Q1 2010?
134.
134, even weaker at that point.
Yeah. So I should say we're not arguing against the sort of structural dollar negatives that are out there. They're clearly true. It's just trying to, I guess, fine-tune the levels that we're thinking are more sort of fair. And we think that, thinking about that dynamic over the last 6 months, a reversal into the next couple of months, and we see some dollar upside from that.
Okay, well, Adrian, stick around. We're going to talk about the yen afterwards, and also the flight of the Aussie and the Kiwi, two of the high performers in the G10 currencies. After this, with Adrian Foster of Rabobank. And we'll also bring in our currency reporter, Patricia Lee, who will join us from Singapore. So in the meantime, if you have any currency questions, send them along. You know the address. We'll see you after this. Stay with us. Get back to our currency chat with our guest this morning, Adrian Foster of Rabobank. And Adrian, you heard Trish. Well, maybe you didn't hear Trish since you don't have an earpiece. But Trish was talking about the Fed's statement and how traders are reading what they said overnight as maybe a possibility that they'll be rolling back stimulus sometime soon. What does that mean for the U.S. dollar?
If they were rolling back the stimulus particularly soon, then that would be an added reason to be bullish on the dollar. I think my reading of that Fed statement is it's perhaps best described as they checked their speed rather than they've kind of taken their foot off the accelerator. They've extended the asset purchase program, and I think that just really that had to happen because they don't really have enough time to go finishing it by the end of this year. And I guess, of course, it just eases the market back to off the drip from the Fed. And the only real comment was that they won't be using all of the tools to go supporting the recovery. They'll be using some of the tools.
Okay.
So I think very much a mini step.
A mini step.
In the dovish direction.
All right. Well,
sorry, in the hawkish direction.
Hawkish direction. Well, if the U.S. dollar, you're expecting the U.S. dollar to strengthen in the future. We have, the Japanese markets back online after holidays. What does that mean for the yen-U.S. dollar cross? Because we're still seeing the yen trade at pretty strong levels, near those 12-year highs.
Yeah, and if you just look at the evolution of the FX markets over the last couple of years, we always think about it in terms of dollars, whereas in fact there's been a yen trend of the last few years. That's given way in the last year or so, the last year and a half, to a dollar trend, and when the dollar weakened, it weakened against pretty much everything. So I think that's going to be what's reversing in the next couple of months. So we see dollar stronger against the euro. We similarly see it stronger against the yen.
How much stronger against the yen? We're looking for at an average call on our analyst survey of 97 to the USD by year's end, 98 by Q1 2010. Sounds about right?
Oh, sounds about right, to be honest, yeah. Within a couple of figures, yeah.
Okay, well, let's talk about the Kiwi then, because as Trish pointed out, it's also in focus today with the Kiwi still high flying. In fact, I think it's that and the Aussie dollar, two best performers in the G10. How much higher do you think these currencies can go? I mean, how much stronger can it get? It's getting already a quarter, 25% up already.
I think that if you think about the trajectory of the New Zealand economy, 5 quarters of contraction, and it's really just popped its head above the zero line in the second quarter of this year with just 0.1% quarterly growth. I think the market was probably fairly bearish on the Kiwi economy for quite a long time relative to the Australian economy. The Australian economy, we know, emerged much quicker, didn't experience a recession. It's been quite a positive story. So there's probably in net terms a relative short position against benchmark on the Kiwi dollar, and I think that's where the Kiwi dollar is getting a lot of its legs from now. So if you think about the way the market's probably positioned in Aussie, it's probably long.
You would go long on the Aussie.
No, I think the market is probably long.
So how would you play the Aussie?
So I think the underlying fundamentals very much in favour of the Aussie dollar, and I think the RBA will be the first central bank to be hiking. And actually, there's a real risk that they hike in October, because I think they regret, or in a perfect world, they wouldn't have implemented their March cut back in earlier this year. I think they might just take that off the table. So there's some positive support for the Aussie dollar, but my guess is that the market's well long Aussie dollar. So I think around the current 87 where it is, I think you can probably see it down to 85.
Yeah, and so how do you play going long, with traders going long on the Aussie dollar? What do you do? Do you do the carry trade, or?
Yeah, a long Aussie Kiwi I think works, but probably from a level of about 117, not the sort of 120 and a bit that it is at the moment. Okay. But I'd wait for some short-term weakness in Aussie dollar.
All right, Adrian. Nice seeing you once again. Welcome back. Adrian Foster of Rabobank.